Okay, so welcome everyone, and I hope you're well. Thank you so much for joining me this morning. This is the self-assessment tax webinar. My name is Mariam, and I'll be hosting today's presentation. Just a couple of things to run past you before we begin. So firstly, I hope you can hear me okay. You can see the slides okay. If you can't, please do let me know in the chat box so that I've been made aware of that. Also, if you've got any questions throughout the webinar along the way, please do use the chat box and ask away. I'll try my best to answer the questions as we go along. Okay, so I'm just going to go on to the next slide now. Okay, now, so if you've not sat in any of our webinars before, I'm just going to explain who Wenta is and the services that we provide, and also a quick introduction as well on myself, so you have a more of an idea on my experience too. Thank you, Annalise, for confirming. So I'm a professional Amazon seller, and I've been selling on the Amazon platform for over 2.5 years now. And I've also mentored other entrepreneurs and helped them set up their own Amazon store. I also currently running my own coaching business alongside this venture, whereby I offer course content and one-to-one services to my students to increase their, product sourcing, finding suppliers, and their overall success rates of their business. I've also had the opportunity to use Instagram to advertise services as I was an affiliate. So, I've been able to monetize on that. So yeah, I've got a couple of experiences in the e-commerce field and businesses. I've also got qualification in business and accounting, and I've, and hopefully that will help if you've got any questions on that. So just moving on forward with Wenta. So what they do, so they've been around for 39 years, and they're celebrating their 40th year anniversary this year. There are a not-for-profit social enterprise, and they basically have two main income streams, where one stems from the business centers that they own and run. So they have 3 buildings that they own, one in Watford, one in Potters Bar, the other in Enfield, and they also manage and run the BTC in Stevenage. And what they basically do is they rent out the office spaces in these buildings to their clients. So we have office spaces varying from 1 person, 2 people, 3 people offices, all the way to an entire office or floor area, depending on the size of the business. So we're there to help you kind of suit your needs as well. We also have hot desking facilities as well, which basically is a co-working shared office space. So if you're a small business looking to get away from home, if you require working from home and you just want that professional environment, or in a place where other people are also working from, you can opt in for that option as well. You can go for a permanent desk, or you just hire one as and when you need it. So yeah, if you decide to go for the shared office space and an actual compared to the actual separate room that you could go for, they're 2 different services, so the prices will differ too. Some of our sites do also have light and industrial units as well, which can be used if you are more kind of product-based business and you require having more of a larger space basically. Now our contracts are a 30-day rolling contract for office spaces, which means you can cancel and renew as and when you need to. So that allows us to do the second strand of the Wenta business model, which is the business advice that we provide, the one-to-one services, the webinars that we host, the workshops that we do, and we also call external companies and sources as well, such as Google, to share their expertise and help clients like yourselves within your business. And we also provide resources too, and we're able to do all this for free for you because of the office spaces that we rent out. So it's also nice to know the other additional services that we provide to that can be beneficial to you and at your disposal. So the one-to-one sessions where 5 advisors, including myself, and the webinars are there to give you knowledge on specific topics. Like today, we're here on self-assessment tax form, tax returns. So hopefully that will give you the bit of knowledge on that particular field. We also have 2 brand new services that we introduced last year, and they're the net zero services. I'm sure you're all aware of the government's initiative of making the country more greener. at the moment, due to the increased consumption of greenhouse gases and our daily activities, is affecting the planet, causing global warming and climate change. And we're seeing this around us with the natural disasters, with flooding and extreme weather conditions. So the government have introduced a net zero strategy to decarbonise all sectors of the UK by 2050 and reduce UK emissions. Reason why I mention that, because you're probably an existing business or you're looking to start up your business. So if you do want to go down the greener services, it will, it's quite good to start off now. So, for common practice as well, but also, because of this new initiative and how expensive this, potential path is or could be, the government are also and have also introduced a lot of greener grant options as well. So if you're unable to, find a grant that suits you, maybe going for the greener vision can actually help you achieve more grants as well because of that. So we've got the net zero subscription based service where there's a tier system. The first one's a free subscription, which is a bronze one, and that gives you a taste of what you can expect within our subscription based program, and there's no commitment to that. No card details are taken, no payments are taken, and it's a really great way for you to start off with. And it gives you, the government the initiative that you are taking action and you are trying to do something to, make that change. At the end of each tier, you get a badge to say you've completed that, and you can use that with your marketing as well, so that people are also aware that you're, trying to be more of a greener business. And then the tiers moving forward, which is the silver, gold plus, we start to charge on that, but it's not really expensive. The highest tier you'd go on, I think it's like $11.99 plus VAT or something like that. So it's really good. You get accredited as well, so it's something for you to think about. The other service that we have is a feel good services that we also introduced last year. So we've worked really hard to get you good discounts with different companies that provide different services. Please do have a look at our I think they're called the discount section, the savings section on our website, and see if you can save money by using one of our affiliate codes. Okay, so if we've managed to really work hard with these and give you the discounts that that might be beneficial to you. We've also managed to get a great offer with the Tide Bank as well. So if you open up a business bank account with Tide Bank through our website and our link, that will give you a £50 credit into your bank account. It's not a lot, but it can help towards any kind of startup costs that are involved. We also do virtual offices as well, services. So that basically means, I'm not sure if you're aware, but if you're registered for a business, or you're looking to register for as a limited company, you'll be required to provide a registered address in there. Now, if you're not aware already, but all the details that you put down as a limited company is available for the public to see, which means if you're using your home address as your registered address, you're giving people that information out as well. So what people tend to do, they look for to rent out an address so that they could use that instead of to hide their identity and to protect themselves. So that is something that we provide as well. You can rent out a registered address with us. We also provide other services as well, so depending on what you want, the packages will increase in price. So if you just think of, if you were to have your own office, what would normally be required? You'd need a receptionist, somebody to answer the phone calls, somebody to take messages, somebody to take parcels, those kind of things we offer as well, so that you don't have to have you don't have to have an actual office, and we can do those services for you instead. So yeah, that is pretty much it in terms of what we offer. Just going to go on to the next slide now. So today's today's webinar, as you know, is on self-assessment and your tax return, and all you need to know moving forward. So we try giving you as much information as you need so that you're in a position to complete your self-assessment tax form. So what we're going to do is we're going to go through some certain topics that will be beneficial to you. And then after that, we're going to go have a run through of an actual tax return form. So you're aware of what to complete and the information that you'll need in order for you to complete those sections as well. Right, so what will we be covering today in today's webinar? So do I need to file a tax return? Okay, we'll obviously discuss the importance of a tax return and whether it's a compulsory for you to fill one in, especially once you've registered as a sole trader. Where do you start? Okay, where would you start from? It can be a daunting experience, especially doing it for the first time. So we will go through this together in this webinar. Allowable business expenses, what could these be? We also talk about simplified expenses as well. Penalties, completing the tax return. So that will be the actual going through a walkthrough as well and a step-by-step guide through screenshots on how to complete a tax return. We'll also look at penalties as well. Can you be penalized? How to pay, and do I need an accountant? Okay. Or can you actually do this yourself? So it's something important knowing, as you can potentially save your business a lot of money. Okay, so do I need to file a tax return? Okay, so if you're self-employed as a sole trader, in the last tax year and you've earned over £1,000, then yes, you would need to file a tax return. Okay. If you had, you also need to consider any income that was not taxed at source. Okay, so this could be income from renting, if you've got any buy-to-let properties, if you let out any rooms in your house, whatever that might look like. Because it's money that you're receiving directly from your clients or your customers, it's not money that's been taxed at source. It's not been deducted. It's not tax deducted. So you would need to make sure that you're doing that yourself, and you would do that on the self-assessment tax form. So that's not taxed at source. Tips and commissions, usually this is not accounted for in your pay. So you would need to include this too. And also savings and investments, or dividends that you've taken out from your limited company. Again, it's not taxed at source. It's probably payments, transfers, or, that you've made, money that you've made from investments and savings. These things are not taxed at source, so you would need to do that. And any other foreign income, because that's coming directly from another country, it's not going to be taxed, so you would need to input that information in there as well. There are other ways of checking if you fall into the criteria of having to file a tax return. And what we've done is we provided you with a link on this slide for you to click on and have a look, and it will take you directly onto the website. Don't worry too much about trying to copy things that are on the slide already. If you've registered, obviously you registered with an email address. What we would do once this webinar is over, we would send you a copy of today's recording and PowerPoint presentation, if you want one, to your registered email address. So that will be within 24 to 48 hours. Okay, so what do you need to do? Where do you start from? So you may have already reached that £1,000, okay? Or you made your first sale and now you know your business will make that £1,000 very soon. And what you want to do is you want to then set up and register. So what would you do? So firstly, you'll need to register for an online account. This is also known as your business tax account. Okay. We've also provided you with a link that will take you straight to that page, as you can see. Now, when you register, HMRC will post you an activation code. This activation code can take anywhere between 7 to 10 working days to arrive, and it expires after 28 days. So when you receive that, please do make sure you activate your business or your government gateway is another word to use, or to call it. So you also need a government gateway user ID in order to log on, which you will create as you'll be doing this for the first time, and it will be sent to you through the post. You'll also receive a unique taxpayer reference, also known as a UTR number, and this can take anywhere between 1 to 3 weeks to receive. A UTR number is extremely important, and it's used when you're completing your self-assessment tax return. Now, if you were previously self-employed and you already have a UTR number, but you've not filed a tax return recently, for example, last year, then you will need to register again. The UTR number will be the same. You're basically activating it. The UTR number won't change. You have the option to file a tax return through post as well, but it does take longer, and it's so much more easier doing things online as it is immediate. 93% of the people that are self-employed usually file their tax return online. Okay, so let's look at some of the dates and deadlines that you will need to remember. So the first day is when the financial tax year starts, which is the 6th of April, okay? The second day would be when the financial tax year comes to an end, which is the 5th of April the following year. Okay, so I guess we're on the 5th of April today. So this is a clear example where last year, if you started anywhere between the 6th of April 2022, your year would come to an end today. Basically, this is your the last day of your tax return, not your tax return, your last day of your financial year end, basically. So that will be your first year, the 6th of April 2022 to the 5th of April 2023. Okay. This is a full tax year. If you have been trading anywhere between this time, you will this will be considered as your first year. Even if you registered for your business on the 1st of March and you've only had a month and 4 days, okay, that is still your first year. Okay, so if you've been trading anywhere between this time, you will need to file a self-assessment tax form by this date, which is the 31st of January 2024. So you have 9 months starting from tomorrow all the way till the 31st of January to complete your self-assessment tax form. It gives you enough time. HMRC have been really lenient with making sure that you've got enough time to get your records together, to get your evidence together, and to get your numbers accurate and there basically. So it's quite important for me to also say and mention that you don't want to, even though you've got so much time to do everything, you don't want to leave everything to the last minute and do things on the 30th of January, for example, especially if you're hiring an accountant. You don't want to be putting that pressure on yourself and your accountant. It's not fair on them. It's not fair on you. So if you were, got all your numbers ready, you know exactly how much you've made every single, day of the week, and throughout the last year, you can potentially do your tax return by the end of this month, basically. Okay, you don't really need to, wait towards the end of the year. In fact, the quicker you do your self-assessment tax form, the more time you have to make any payments towards anything that you owe to HMRC, because that deadline, the 31st of January, is not just for the self-assessment tax form, it's also the deadline for your payments as well. Now, whilst you're doing all that, you're already in your second year. So from tomorrow onwards, your second year will start, which is the 6th of April. Okay, and that will carry on. And then your second year will come to an end next year, 5th of April. I hope that makes sense so far. Okay, so let's talk about allowable business expenses, okay? If you're self-employed, your business will have various running costs. You can deduct some of these costs to work out your taxable profit, providing they are allowable expenses, okay? So So just before I move on to talking about these business expenses, and in case you're probably at a stage where you would like a bit more basic information, yeah, there's three main incomes that are associated when it comes to doing your self-assessment tax form and as a self-employed person. You've got your turnover, which is all the money that the business has made. Okay. Even if it's £50 here, £50 there, £100 here, there, whatever payments that, whatever you've charged your customers, that is considered as a turnover. Okay. So what you need to do is you need to have a figure for that amount over the last 12 months. And that figure is your turnover. Now, it's safe to say that, HMRC do understand that as a business owner, to get the finished product to your customers, it's going to cost you. It's not like going to work. If you're employed, you're going there, doing your work and coming home. It's not like that. It doesn't work like that. If you are providing a product to your clients, okay, it's going to cost you to make that product. It's going to cost you to deliver that product. And the money that you get, if, for example, you get £100 for that product, that £100 isn't the money that you're taking home with you. That's not the money that you've made from that product. It's only once you've deducted all the other expenses that were involved in creating that product, is the money that, once you've deducted that figure, is the money that you're then left with. And that's money that you've made from that business, okay, from that product or from that service that you provided. So it's so important to understand that expenses do occur, and then you're going to have your indirect costs and you're going to have your direct costs. So direct costs is basically costs of creating that product. So let's just give you an example. Let's just say I'm a baker and I sell cakes. I charge my client £50 for that cake that they've ordered. £50 is my turnover, but the costs of creating that cake, so for the cost of actually, making that happen, for that finished piece, it's going to cost me to get that self-raising flour, for that, for the icing, for the, for the sugar, for the eggs. All of those is what it's cost me to create that cake. Okay. So let's just say, for argument's sake, it's cost me £10 for the direct. So those are direct costs, the costs of creating that product. The indirect costs is the other costs that are not associated particularly with the product that you've sold, but the running of the business. So let's just say you hire out an office space, not an office space, but you hire out a place where you bake the cakes, for example, like a kitchen, and you're paying £1,000, for example. Okay. It's not directly associated with the actual product, but it's an overall cost that you incur. You've got to pay towards it. So those are your indirect costs. So let's just say you've made £2,000 for that month. You've got to minus all the direct costs involved in making those £2,000 worth of cakes. And then you've got to include all the other expenses as well. So the indirect costs, and you'll minus that, and then you're left with a net profit. So those are the three figures you need to remember: the turnover, the expenses, both direct and indirect, and then you've got the profit. The profit you'll get after you minus your expenses from your turnover, and that is basically your net profit, the money that you take home, and that's the money that you're paying tax on. I'll talk about allowable expenses. I will talk about personal allowance as well, but that's at a later stage. So just wanted to clarify that for you, so then you better understand these business expenses. So these are expenses that you can claim and you can minus from your turnover. The idea is, as a business owner, the more you can minus from your turnover, but assuming that you can prove those expenses, the lower your profits are going to be. The lower your profits are going to be, the less you're paying to the tax man. And that's not cheating the system, because you've got to prove that you did actually have that transaction or had that as an expense. But as a business owner that works really hard to earn that money, the more you can keep to yourself, the better. Just a clear example of that, you probably didn't know that you can use your car insurance as a business expense, especially if you're using your car for business purposes. So imagine £2,000 of profit you could have had as an expense, and because you didn't, you're now having to pay 20% of that £2,000. Okay, and that's basically £400 you're having to pay towards tax, when you could have saved that, especially if you're using it for a business expense. So those are some of the things that you would need to obviously understand and thinking. But as an evidence to say that yes, your business, your car insurance is a business expense. It's not just a matter of looking at the direct debit that comes out of your bank account. They would, if HMRC were to do any audit checks on you, they would want to see a certificate, your car insurance certificate, which specifically states on there that this car registration number or this car is used for business purposes. That is your evidence. So, you've got to make sure you've got, clear evidence to prove those expenses. So just moving forward on these expenses, what are those expenses? So you've got business premises. So many sole traders, run their businesses from their homes, in which case you can only claim tax back on the proportion of those expenses that relate to the space that you use for your business, including heating, electricity, council tax, and mortgage interest. You'll need to find a realistic way of dividing the costs. For example, you divide your bills according to the number of rooms that you use for your business, and the cost of your business premises as well. So for example, let's just say you've actually hired out an office space especially for your business, then any costs, including rent and any other costs associated with that, including heating, lighting, and business rates, will all be an allowable business expense. Stationery and phone bills, okay, the usual paper, envelopes, pens, but also claim back tax on postage and printing, including the cost of printing, cartridges that you use as part of your business is something that you could claim tax back on as well. You could claim tax back on your business phone, your mobile, your internet bill as well. If you use your phone, mobile, and internet for both personal and business use, you'll need to demonstrate a realistic way of dividing the costs, and you can only claim back tax on the part that's for your business use. If you can't show this, you can't claim back any of your tax, okay? Sometimes it probably makes sense to have a separate phone, just especially for your business use. And then that, airtime bill or your monthly, your monthly contract and payment would be considered as a business expense. Also, things for you to consider is software, antivirus, any Microsoft licenses that you're using, that can also be used as a business expense. Regarding uniforms and protective clothing, so generally you can't claim for clothing, which is to say something you'd wear as part of an everyday wardrobe. So even if you've bought a suit for work, for example, you can't claim that as a cost, okay? But if you buy a uniform that identifies what you do, or you need special protective clothing to do your job, you can claim for that. You can't claim for non-uniform items such as shoes and socks. If you're an entertainer, for example, and the clothes you're buying are a costume for a stage performance, for TV or for film, okay, film performance, then you can claim tax relief on that too. Staff costs, you can claim tax relief on employee and staff salaries, bonuses, pensions, benefits, staff and employee costs. Agency fees can be another one, subcontractors and employers' national insurance contributions. If you're paying towards that and you've hired, because you've hired, you're basically, they're on pay slips, your staff are on pay slips, then you can do it that way as well. And you'll be able to claim tax back on that. Bank charges, if you have a business bank account, you can claim tax relief on bank, overdraft, and credit card charges or interest on business loans. You can also claim tax back on hire purchase, lease, or other forms of financial payments for equipment that you use in your business. Professional fees, if you get advice from an accountant, a lawyer, or any other professional as part of your business, then you can claim tax back on their fees, okay? So it's quite good to know that, especially if you're wanting to hire an accountant, but they will know all that anyway, so you don't need to do anything. You can claim allowable expenses for hiring surveyors and architects for your business too, but it's just not for personal home improvements. Then you've got travel costs, okay? Travel for business, including train, bus, taxi, airfares, and accommodation costs, but these only apply if the primary reason for your journey or stay was for business. If you take a trip that combines business and pleasure, you can only claim tax relief on costs that you can show are separate from the private part of your journey. If you use a vehicle as part of your business, you can claim tax relief on vehicle insurance, repairs and services, fuel, parking, breakdown cover, hire charges, vehicle license fees as well. Again, tax relief only applies to these if they are business rather than private expenses. You can't claim tax back on parking fines or other fines that have incurred when you've been driving. Okay, there's no tax relief on breaking the law. Just thought I'd put that out there in case you didn't know already. Stocks and materials. So you can claim tax back on items that you resell, for example, stock, raw materials that you use to make goods for sale. So again, we could talk about ingredients used for baking a cake, for example, and then direct costs from producing goods as well. Marketing and advertising. You can claim tax back on costs of advertising and marketing your business, as well as traditional print marketing that can include costs of hosting and maintaining your company website and business cards and posters and leaflets. But be aware, you may think that treating a customer or supplier to lunch is marketing, but HMRC considers that as entertainment or entertaining them, which you can't claim tax back for. If you're a member of a professional trade body or organization as part of your business, you can claim tax relief on your membership fees. Subscriptions to trade or professional journals are also allowable expenses, so you can claim back for these too. So just to confirm and just to make sure you're aware, advertising or marketing cannot include entertaining costs, such as buying a client lunch or, accommodating them in any kind of way. Now, you can refer to our finance and bookkeeping webinar for more details on that, to give you a bit more information. But just before we go on to the next slide, I do want to quickly speak to you about simplified expenses. Yep, Annalise, just to answer your question, what about subscriptions, memberships? I've just mentioned that. I don't know if you heard me say that. You would be able to claim back for that. Okay, just talking about simplified expenses. So simplified expenses are a way of calculating some of your business expenses and kind of differentiating that from from your personal ones, but using flat rates instead of working out the actual business costs. So, when I was talking to you about, when you're working from home, for example. So at the end of the tax year, you can use the flat rates for vehicle mileage, working from home, and living at your business premises to work out your expenses. Those are the three things you can do it on. And you use a simplified expense checker to compare what you can claim using simplified expenses and what you can claim back by working the actual costs. So this will help you work out if simplified expenses suits your business best, or if it's best to if it's working out to be really low, then it probably makes sense to work out the actual costs. So some people just opt in for the simplified one just because of the ease, okay? And some prefer, to do it because it just works out to be slightly more in costs than it is to do it the other way. So we've got business miles. These are simplified expenses. Cars and goods vehicles for the first 10,000 miles currently stands at 45p per mile. And then cars and goods vehicles after 10,000 miles will be 25p. And then I think motorcycles or motorbikes will be 24p per mile. Working from home, when you're calculating your allowable expenses using a flat rate based on your hours you work from home each month. So that's how you'd work out with the simplified expense on working from home, is based on how many hours you work from your home for your business each month. This means you do not have to work out the proportion of personal and business use for your home. For example, how much of your utility bills are for businesses. The flat rate does not include telephone or internet expenses. You can claim the business proportion of these bills by working out the actual costs. So you can only use simplified expenses if you work for 25 hours or more in a month from your home. So we're not talking about a week, we're talking about a month. So hours of business use per month, the flat rate per month. So if you are working anywhere between 25 to 50 hours a month from home, you can you can deduct £10. 51 to 100 hours a month, you can deduct £18, and then 101 and more hours worked from home, you can deduct £26. So when you register as a sole trader, you are basically committing and promising HMRC you will complete a self-assessment tax form at the end of each financial year. But when you don't, you can and you will end up being penalized and paying separate penalties for making a late return and for late payment. So I'm just going to go through some of the points on this slide here. So separate penalties for making a late return and for late payment, like I mentioned before. If you are late with both the return and payment, you will be liable for penalties and charges on both. So it's important to understand that it's not just going to be one overall payment. It will be two separate payments, calculating their own set of charges, and you will be liable to pay for both of them. HMRC will charge interest on tax owing and on the penalties and charges incurred, and the interest currently charged at a rate of 3%. You can appeal against a penalty if you have a reasonable excuse to do so. And HMRC penalty assessment tool is provided to you at the bottom here. So you can click on that to look at that in more detail. Okay, so here is a breakdown on the penalties. And we can see there's separate ones for late submission and late payment on the right-hand side. Okay, again, don't worry about writing all this down. You can have a recording sent to you, so you can cross-check and look back on this as well. Right, so you will be charged £100 fine if your tax return is up to 3 months late. So remember, the deadline's the 31st of January. Even if you were to do your tax return on the 1st of February, you've just incurred a £100 fine. And if you do it on the February, March, April, and if you do it by the end of April, it's still £100. So within the 3 months, you'll be charged £100. Anything after end of April, so after the 3 months, you're going to be charged, and you've still not done your tax return, you're going to get charged £10 per day of a total of up to £900, which means that £10 per day is for another 3 months now. Okay, if you've still not done it, okay, we're going to be on May, June, July. So if you've still not done it by the end of July, okay, you're now going to have to pay an extra £300 or 5% of what you owe, depending on which is greater. And if you've still not done that, then after 12 months, so now we're talking about the following year, 1st of February or the 31st of January, an extra £300 or 5%, though you could be fined up to 100% of what you owe. Now, these penalties apply even if no tax is owed. So can you just imagine if you had to pay no money, no tax at all, but it's just because you didn't file on time, you end up having to pay, so many charges and fees because you didn't do it on time. And this is why I say again that when you register as a sole trader or a limited company, well, more so as a sole trader, when you register as a sole trader, what you're basically doing is you're promising HMRC that you'll be doing a self-assessment tax form at the end of each year. Okay, so that is your responsibility. Everything that you go into comes with, responsibilities and, things that you have to do. And as a sole trader, that's one of the main things that you must do. Okay, whether you make money for that year or not, whether you've made no money, okay, you still have to do the self-assessment tax form. Okay, it's obligatory for you to do that, basically. Then you've got payment section. So after 30 days of non-payment, there's going to be a 5% of the amount owed. And after 6 months, a further 5% of the amount owed. And then after 12 months, a further 5% of the amount owed. So just a quick example of how this can mount up really quickly. Let's just say you have a submission to do and intend to get around to doing it one of these days, okay? And you only owe about £100 or so in tax, which means it's nothing to worry about anyway. And you're on the 1st of January, you're like, okay, I'm going to do it, etc. And you leave it, and eventually a year goes by and you haven't, and you just get around to sorting it out. But let's just say on the November the 1st, for example. Now, how much will that £100 in unpaid taxes cost you when you make your self-assessment return, over a year late on the 1st of November? So for submitting the form late, you will be liable for all these charges that we've listed on the screen here. So that's £100, £900, and then we've got £300, and then an extra £300. Okay, so that is what we're looking at. About £1,600 in £1,600 in charges there. Okay, interest for paying tax bill late. Okay, so that will be £2.06 or something like that, and then the penalty for paying tax late will be £10. Okay, so the original bill would have been £100, but now it looks something along the lines of like £1,612 basically. So it's really not worth it. And please, 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 just make sure you do it on time. So how to pay? So HMRC will calculate what you owe in tax immediately after you submit your tax return. This will include an additional payment on account. Now, if you can't pay your tax, contact HMRC's Business Payment Support Service on this number and get some kind of that initial conversation going, just so that they're aware and you don't, you're not penalized because that conversation's already been had. I will talk about additional payment on account in the next slide with an example. Okay, so for 2020 to 2021, Jane Smith has a self-assessment bill of £3,000. Okay, so Jane Smith would have made £15,000 in profit on top of her £12,570 in personal allowance to have a £3,000 worth of bill. Okay, so her total profit would have been £27,570. Now, before I go on to the next couple of slides and the next couple of points, I just want to talk to you about personal allowance. So if you are registered, if you are eligible, to work in the UK, okay, and you are, you reside in the UK, you're able to work in the UK, basically. Every individual has a personal allowance of £12,570. And that's what it is currently at the moment. It changes every year. It can change next year, but at the moment it's 12,570. What that means is any money that you make, okay, up to £12,570 of this is not taxable. You won't get taxed for earning up to £12,570. Okay, that's whether you're employed, whether you're self-employed. Okay, that's that figure that, that's basically your safety net. That's an amount that you won't get taxed on. So if you're working for a company, let's just say, how I work for Wenta, okay, and you're earning, let's just say, I don't know, 10,000, no, not 10,000, I have to be say something more than that, 20,000. Let's just say you earn £20,000. You earn £20,000 annually, okay? The first £12,570 of that £20,000 is not going to be taxable. It's the remainder bit. So I don't know how much that is, about £12,430. Am I getting this right? Yeah, £7,430 is what you're going to be paying that 20% tax on. Okay, same with self-employment people. Okay, so if you're self-employed, the only difference is that £12,570 won't be of your turnover. It will be of your profit, because as we mentioned before, you've got expenses to consider, and it's not fair on you for you to be, using that 12,570 as a turnover, because that's not money that you'll be taking home, and you've got to make deductions before you work out what you are taking home after all those deductions. So what HMRC have done is, for self-employed people, the first £12,570 you make in profit is your personal allowance. So anything you make up until 12,570 in profit is not taxable. Anything you make more than that is what you get the 20% tax on. I hope that's clarified a few things there and it makes sense to you. And on the 31st of January, 2022, Jane Smith will pay this £3,000 plus 50%, which is £1,500 on account. So her total payment on the 31st of January, 2022 is 4,500. When then on the 31st of July 2022, she will pay the other 50% on account, which is £1,500. Now, before we go on to the next slide, I am going to talk to you about payment on account, just so that you have a better understanding of what we've just spoken about, because right now, none of that's probably made sense to you. So if your income tax is below £1,000, you do not pay on account, okay? So the profits we're talking about. So this woman's profit, or Jane Smith's profit, was £3,000. So she's over the £1,000, and that's why she's paying payment on account. But if your profits are less than £1,000, okay, you do not pay on account. But if it's over £1,000, you have to pay additional on payment on account. So just a bit of information on payment on account. Payment on account is any partial payment of an amount that is owed by you that is not matched to a specific invoice, which in this case won't. You can't match that £1,500 to anything, because you won't know what your tax bill is for the next year, basically. Okay. But payment on account is actually spread. The cost is spread. The payment on account spreads the cost of your tax bill into 2 installments over the year, and it was designed as a method for payment. As a method for paying some of your tax bill in advance, and therefore to prevent people from, being indebted in debt to HMRC. So it's to help the self-employed people stay on top of their payments, basically. So you're basically paying in advance for the following year. Do I need an accountant? So self-assessment can be done by the individual. So when you fill in a tax return, as I mentioned before, you come to know that you only need to know 3 sets of figures. So the turnover, the expenses, and the profit that you made for the year. How you get to these figures, how you get to these figures are determined by the transactions that are made in and out of your business and evidence to prove it. So what we mean by that is, so I think we've got a message here. Lynn, I'm not sure about that question of yours. So Lynn's asked, do you get a reminder that your July on account payment is due? I think you do get a correspondence from HMRC with that, so that you can make payment, yes. But you might need to check up on that, maybe call HMRC to confirm. Okay, so what I'm talking about with the bookkeeping side of things is, for you to know what your turnover is for the year, you would need to do bookkeeping. You need to keep a record of all the income that you received for the year. The same with expenses. For you to get to that total costs or total expenses for the year, you need to record those expenses that you've had over the course of those 12 months. You need to know what those figures are. And the only way you could do it is when you record those transactions. So when you're recording those transactions, that is included as bookkeeping, where you're recording the income that you've received, the outgoings that you've had for the month. So you can do it in, on a monthly basis, on a weekly basis. The idea is that you set out a day in a week, or, if it's not too many set transactions in the month, you could do it once every 2 weeks as well. You know, I understand the importance of marketing. I understand the importance of getting the clients come through the door. I understand the importance of, spending time on social media so you can get, but admin work is just as important, if not more important, than all those other tasks that you have to do. Now, that is because if HMRC were to do audit checks on you, okay, and if they were to do an audit check on you, which they can do, by the way, and you don't have the right figures that they've got on the system to what you've got on your files, and if they were to do an investigation on you, and if any of the figures are incorrect, that will get you in trouble. So just a bit of background, you need to have 6 years worth of records. Okay, so if you're just starting now, make sure that you keep the next 6 years worth of records, because HMRC can come to you in 3 years time, 4 years time, and they'll be like, we want to see all your accounts for the last 4 years. And they can do that. And it's not because you're in trouble. It could be just, like I said, an audit check that they're doing. And what they want to see is not just the figures that you've got on your system and the figures that they've got on their system. Yes, they want it to, they want to obviously make sure it matches. But what they're also going to want to see is evidence for all those transactions as well. So another key thing for you to remember is to make sure you keep all your receipts. You probably hear that quite oftenly, and this is the reason behind it. If you've said your turnover for the year 2020 to 2021 was £20,000, okay, you need to show evidence of that. And the evidence won't just be bank statements, but evidence will be in a form of some kind of document. So I would suggest best practice is to make sure that you create invoices. So you raise an invoice, and that invoice, it acts like a evidence of in the income that you've received. You might be a small business. Let's just say you're a cleaner, or you're a gardener, for example, and you just know that your customers will not need an invoice because you're probably taking cash in hand, for example, or it's just a small business that you've a small thing that you've done for them. But you still want to keep that for your own records. You may not give it out, but it's good for your own records. That £50 that you charged your client on the on the 12th of May 2020, you're not going to remember that come next year, especially if you've taken cash from them. Sorry, just a moment. So these invoices, they work as evidence basically for you, and each transaction would need to amount to, or all the transactions, all the evidence would need to amount to that £20,000 you've said or you've given for the year. And the same with expenses. Remember, we were talking about the more you can show, the lower the profit bill, the lower the bill comes. You need to show evidence for each of those transactions. Okay, so if you've said your expenses were £15,000, you will need to make sure that the receipts that you have, the invoices that you've been given, they all amount to £15,000. Now, if you've got any paper receipts, then you're afraid that will obviously the ink will rub off, for example. It's good practice to take pictures of that and put it on the clouds. Okay, put it on your laptop, and yeah, so it's quite good you may want to have a spreadsheet for each month, or a folder, especially for that financial tax year. But the idea is to make sure you've got records of all of that, and within that month you also included all the evidence that amount to that figure as well. Keeping a spreadsheet, yeah, you can keep a spreadsheet up to date. So you can have let's just say you've got a folder, and the folder is named financial year 2020, so April 2020 to April 2021, and then within the folder you've got 4 separate documents. You've got 12 different documents on their spreadsheets. When you click on each spreadsheet, that will be for that month. So you've got one for April, you've got one for May, one for June, one for July. And then within that, you've got all the transactions, all the income you've made, and all the expenses that you've got as well. And then you would probably want to put maybe a separate folder within that folder that obviously includes all the evidence for that particular month as well, and you can date that folder April, May, June, July. That will keep everything more simpler. It will simplify things for you. It will make more sense, and it just makes you more organized as well. Do online banking statements count as evidence? No, it is in a way, but it doesn't prove that it's an expense. Like, so if for example it isn't evidence, but you would need to back that up with paper evidence, like for example receipts and stuff like that. Because if you've said you've paid for I don't know, £2,000 for a laptop, and we've seen a payment come out for £2,000 to Currys, for example, the HMRC won't know that that's payment made towards a laptop. It could have been payment made towards a TV. I'm not saying you're lying or any sort, but the receipt would evidence that, yes, there's a receipt there that says that this laptop was for £2,000 and it was dated on this date. And then that would then correspond with what you've got on the bank statement for that date, for that payment that has come out from your bank account. I hope that makes sense. So evidence is actually the receipts and all the invoices that you've got, and it's backed up with obviously the statements as well. So you need to show the statements and you need to show the evidence as well. Yeah, so something like that, you would need to get some kind of paper evidence to say you've made you paid towards that. It doesn't have to be it doesn't have to be a proper receipt. These days, you'd get some kind of a paper receipt from people as well, and that could act like an evidence as well. So even some kind of some paper confirming that payments towards that laptop was made. So yeah, that's absolutely fine. But again, you would want to show some kind of evidence for that. So it's good to know. I think the more in terms of any other information or questions that you've got, I think it's probably best for you to maybe speak to an accountant, because there may be some way around it as well. And that's what they're good for. They're knowledgeable, basically. So yeah, so I just wanted to really clarify that with you before I went on. So that's why that's the reason, obviously, why I mentioned bookkeeping, because it's then so much more easier for you to do self-assessment, okay? Because you know what needs to be done, okay? You just need the bookkeeping software. You can have a software. You can use like we've just said, you can use spreadsheets as well to do that. I will actually talk about bookkeeping options available to you in a little while, but let's go on to point 2. So the typical fee is between £100 and £200 per hour, or for a small to medium accountancy practice. For a small to medium accountancy practice, and a smaller accountant might charge around £250 to £300 all in for a straightforward tax return. So again, that could be something that you want to do, so you can avoid having to do the form yourself, but bookkeeping needs to still apply. You still need to do that. They won't know what those figures are until you've given it to them. So the bookkeeping is something that you still have to keep going, or you may want to hire a bookkeeper to do that for you. Somebody that's just somebody like yourselves that are just starting out, probably cash short, probably not the right thing to do just yet. And it's something that you could do yourself, or maybe hire a virtual assistant to do that for you. An accountant's understanding of the different allowable expenses or allowances claimable might mean that they pay for themselves. Now, what we mean by that is accountants are knowledgeable. And something that we don't think might be considered as an expense, they may say, actually you can include that as an expense, because they know they've been in the trade for longer than, that's what they're designed to do. Then that's what they are they're professionals, and that's what they do. That's their day-to-day job. They will find ways. They're up to date with the legal side of things as well. They know what to include, what not to include, what's acceptable, what's not. So even though you've gone through everything on the government website, there may have been something that you missed, something that you didn't know. And just imagine, just a clear example, there's probably something you paid for £2,000, and if you didn't know that you could use as a business expense, you would have paid £400 in tax for that. But because they've told you about that, that's basically £400 they've saved. So when we say that they pay for themselves, that's what we mean by that. They'll find ways to reduce that bill for you, and that's money, a lot of money that you potentially saved. So if you're cash short as well, you'll find some firms that are happy to set up a direct debit on a monthly basis, or you may want to save that money and complete your self-assessment tax form yourself. So it's totally up to you how you want to do it. Just talking about bookkeeping and packages. So Xero appears to have replaced Sage as a system of choice for accountants. If you are using an accountant, they would be keen for you to use the systems that they're comfortable with. So they might also tell you to download that software, for example. Now, HMRC have a list of making tax digital compliance systems and softwares that can be used or you can see on the government website. HMRC remind, so HMRC, so yeah, making tax digital. If I just talk about making tax digital, is a key part of the government's plan to make it easier for individuals and businesses to get their tax right and keep on top of their tax affairs. Okay, HMRC's ambition is to become one of the most digitally advanced tax administrations in the world, and making tax digital is making fundamental changes to the way the tax system works. And you can transforming tax administration so that it's more effective, more efficient, and easier for taxpayers to get their tax rate right. So the MTD for making tax digital for income tax is a new way of reporting your income to HMRC. So you'll use a software that's compatible with making tax digital to keep digital records and send income tax updates instead of having to fill in a self-assessment tax return. Okay. Some businesses and agents are already keeping tax digital records, and they're providing updates to HMRC as part of a live, pilot to test and develop the making tax digital services for income tax. So if you're self-employed and you decide to opt in for this, then you don't have to do the self-assessment tax form. You're going to have to eventually do it by next year. I think 2024 is when they make it compulsory. But if you want to start, getting your head around that and getting to terms with it, you can start doing it now as well. But that's just regular updates that you're giving rather than doing it every financial year instead. So so when you're looking at packages, that's why I mentioned it. When you're looking at packages, it might be good for you to look for accounting software that is compatible with the making tax digital thing that the HMRC have introduced. Okay, so we're just going to go on a quick 10-minute break. And when we come back, we'll be going through some screenshots on how you would complete a self-assessment tax form. Please stay on. Please don't go off. But we will come back at 12:15 or 12:14, and we'll carry on then. Thank you. If anyone's got any questions for me, please drop it in the chat box, and I'll get back to you after the 10 minutes. Thank you. Okay, is everyone back now? Okay, can I just confirm everyone's back? Just maybe just a yes in the chat box would be great. I just realized I stopped sharing, so I need to just get to that. There we are. Thank you. Thanks for confirming. Thank you. 3, 4, 5. So no one's got any questions for me, so that's good so far. Okay, so okay, so now what we're going to do now is we're just going to this is going to be the self-assessment tax return itself. And this is what you'll be faced with when you log in and do your self-assessment, basically. Okay. Okay, so when we visit the website, it assumes that you're already registered. So you read the so we've got there the file your self-assessment tax return online. And then at the bottom here, we've got here, if you did not register or you did not file a tax return last year, you must register for self-assessment before using this service. If you're filing for the first time or you've sent a tax return in the post but did not send one last year. So if you did not file a tax return or you've not registered, you just click on this button here, and then that will just take you onto the registration process. But what we're going to do here, we're going to look at the bottom here. Yeah, so that's what we're going to click. So when you cannot file online, so you cannot file a self-assessment tax online, if you are if you're in partnership, for a trust or estate, if you lived abroad or as a non-resident, to report multiple chargeable gains, for example, from life insurance. Okay, so this doesn't apply to us. So you're probably not one of these, otherwise you wouldn't be here. So what we're going to do is we're going to just click on register for self-assessment. Okay. Okay, so what you do then is you'll click on file your tax return online under the subheading sending your return. And it takes you to this page. Okay, and down the bottom of that one, you just click on sign in. Click on that sign in button. So these pages at the front do vary slightly, but in the end, what you want to be doing and what you want to finish up with is the sign in button. So you may need to browse around a little bit to find that button. But when you do, just click on it and it takes you to this page here. Okay, and you choose how you want to sign in. So you can click on sign in with the government gateway, sign in with the government.co.uk, verify, or register for self-assessment. So we're going to click on sign in with the government gateway. And then this will be the login page. Okay, so you put in your details there, right at the bottom here where it says government gateway ID. And then you put in your password. So you would have done this when we spoke about this at the very beginning of the webinar, where I took you through the government gateway ID, and you need to activate it. You would have done all that anyway, for you to register as a sole trader. So you would have done that last year or this year if you're looking to register. So at this point, you need to then sign in. They then send you an access code on your mobile phone, and you put the code in here, and then you could click on remember me for 7 days so that you can get back in easily moving forward. Then you need to just confirm your email address as well. So you'll click on continue. Okay. And then this is a dummy one we've done here at the moment. So one of my colleagues did this. So then you'll get an email sent to your email address with the code. You pop the code in this blank section here, and then you click on confirm. Click continue. And here you'll set up a recovery code. So you need to set up a recovery word so that you could get back into the government gateway if you forget your password. Okay. And then you'll pop the word in here. Just make sure you meet the criteria when you have when you think of a word. You'll get what you want to be seeing is all those 3 green ticks on the side to confirm it's good to go word. Make sure it's memorable. That's going to be a recovery word in case you forget your login details. Okay. So then once you've done that, you want to click on continue. Okay. And it's just confirmed that the recovery word has been added. So all of these things do just take a couple of minutes to set up. It's not part of your tax return. It's just the security information that has to be completed when you first log in and to do your tax return. You want to click on continue. Okay, so now we are checking which tax year we are going to do. So just here where it says self-assessment tax year, so select your tax year. So we'll be doing the 2020 to 2021 here, which is the one that we're going to do in this example. And we can see that at the bottom here, we're doing it on the 10th of December. So these are screenshots, by the way. So we can see that on the 10th of December, 2021 is when we did this for 2020 to 2021. Okay. And you also need to check the correct date is being used, that it matches the reporting period that you're wanting to record as well. You can also check by clicking on this link here if you need to file a tax return or not. If for some reason you've forgotten and if you've done it or not, just clicking here where it says check if you need to complete a self-assessment tax return, and then it will let you know. Click on file return. Okay. Right. So you can use this service if in the tax year ending 5th of April 2021, you received employment income, self-employment income, partnership income, UK property income. I'm not going to go through all of that, but we do come under that criteria because we are self-employed, so we meet that criteria. Okay. So then we're going to click on right at the bottom here, start now. Okay. And then we're just going to pop in the details, your details. So again, this is a dummy version. So I think the name I think they want to do the name as Wenta business. So we've got the Wenta business. And then you put your national insurance number in there. Okay. Actually, having said that, because this is something that we were just doing, when you log in, all these will probably be pre-filled in for you. You would probably have the name there, your surname, your middle name, your national insurance will all be there. Basically, it's pre-filled, and you just need to confirm that it's all accurate. So once you've looked at all that, okay, so this is the second part of it. Okay, so we're going to keep scrolling down, and then you come onto this section. And so this is the second part of the long page. You need to click on English and Northern Irish is what you want to click on. Make sure the date of birth is correct, or you may have to fill that in. Marital status. Anything that says optional, you don't need to do. It's not compulsory for you to do it. So we're going to give this a pass for the time being. And then you just click on yes or no for these questions as well that we've got here. So we've got, are you or your spouse or civil partner registered blind on a local authority or other register? I'm going to click on no here. Did you receive notification from student loans company that repayment of an income contingent student loan began before 6th of April 2021? We're going to click no here. Did you receive notification from student loans companies for repayment of a postgraduate loan began from 6th of April 2021? Okay, so click no here as well. Now, if you have got a student loan and you're going to need, you're going to need details of it and put them in here, you'll just click on yes. And I think you'll only need like a reference number and how much you've paid or what your payments are. So you just tick on yes, and it will tell you the information that they'll need. And you will have that information as well, especially if you've got a student loan. If you haven't, just click on no. So in this example, we're going to click no on all 3 things here, and then we're going to click on save and continue. Okay, so you're just ticking yes or no on these as well. So question 1. This section aims to ensure you only answer questions relevant to you, include all income, even if the income has been taxed at source. in the tax year, 6th of April, 2020 to the 5th of April, 2021, were you an employee or agency worker in the year 5th of April, 2021? So you click yes on here. They know you've been paying tax and they, and that you've, been earning income somewhere else as well. So all you need to just do is tick on yes and just, give the information that they're asking for. So this is the whole screen from top to bottom, but the next two slides are going to be halved and zoomed in so that we can just look at it in a bigger version. So the next page is a bigger version of that. There we are. So if there are multiple employments or self-employments, a fresh reporting screen opens for each. So the total PAYE reference and employers' names are required for each of them. Okay, so if it's a yes, because you were an employee, you will need your total pay. Yeah, so you need that information. You can get that information from a P60 or a pay slip as well. So if you're not employed, you'll click on no. If you're just self-employed, okay. So if you're just self-employed, you just click on no. Okay. And the reason why they need this information, because they're not going to tax you for something that you've already been taxed for, is just so that for them to do a bit of a cross-check that your employer is correctly recording all your national insurance and your tax payments. Okay, let's look at the second question. Was your turnover more than £1,000 in total from all self-employments? Okay. If you don't click yes, you don't get to continue. If it's less than £1,000, they don't want to know. Okay, so click on yes. How many self-employment business did you have? You can have as many as you like. Now, having said that, if you are, for example, two separate businesses, you're a gardener and a cleaner, window cleaner, for example, and if one job you're spending 90% of the time on that, and every now and again you're getting a couple of jobs here and there for the other business, you may want to just put both businesses under one, but just make sure you're declaring all the income for both businesses. However, if you spend 50-50 like time and effort on both businesses, and if 50-50 of your time is spent on both, that I would include as two self-employments, and then just keep them separate. And you probably want to keep them separate anyway for your own benefit. You just want to know what each business is making for you, and if it's actually profitable and if it's worth your while, etc. So yeah, you just want to put that information there where it says how many self-employed businesses did you have. So we're going to click one here and then provide your business name. So here in this example, we put the business name as tax return demo. Okay, so are you in a partnership? Okay, so we'll click no here. Did you receive income from UK land and or property? Okay, over £1,000. That's a no. Foreign income, no. Chargeable assets, or had a chargeable gain. Again, that's a no for that one. We didn't sell any buildings or massive machineries or lorries. So consider taking professional advice if chargeable gains or capital gains are involved, okay? You're going to probably need a bit of help on that anyway. So in this instance, we're going to click no on all four of them, and we're going to click continue, save and continue. Okay, so this is page 2 of 3, I think. Have we got that right? Yeah, so that's page 2 of 3. This is the next page. We've not got a zoomed version of this, so we're just going to go through each one here. Oops. Okay, so these are all no's as well. Did you receive any interest? Okay, interest from UK banks. Now, this is only if the interest that you've been paid is not taxed at source. However, most UK banks is tax deducted already. So it's probably going to be a no there. Got any dividends? Okay, the next question here. We're going to click on no because we're not a director or shareholder of any company. Then we've got pensions here. Okay, I'm not taking any pensions from anything. So if you do, if any of them apply to you, just click on yes and just give them the details that they need. Most likely to be the account details and how much you get paid. And in case, and just in case, you probably want to know who the pension holder is, just to confirm. Did you get child benefits? So this bit here. If you tick yes, you don't need to do anything else. Probably it's just that information there. Okay. Did you incorrectly claim anything? This is regarding coronavirus payments. Okay. I don't think it's probably going to be on the form this year, but I can't guarantee that. But I think it's not going to be there this year. Then you've got, did you get any other UK income? We've clicked on no. Income tax losses, no. Are you liable for any pension savings tax charges? No. Okay, so we've got no on all four of those, a couple of those, sorry. Okay, so it's going to be no on all of these as well, but I'll just quickly go through that with you. We've got personal pension or retirement. Okay, charity, no. Did you give to charity? Okay, so that's no on all these other tax reliefs. Okay, so just to, we're going to click no on all of these. Lynn, the answer to your question, if it gets asked, so to begin with, we're just going through a demo right now, so we're just going through roughly where each section is. If it gets asked in one of the questions, put that information in there. Yes, you probably need to, but it's only if it gets asked, you need to put that information in there. Our tax returns are done by my accountant, so I really wouldn't know the answer to that question. I would say just take your time for the first time you do your self-assessment tax form. Just take your time in reading what it's asking you. And if you just need a bit of clarification, maybe it's best to speak to an accountant on that. Okay, so this is just telling us our progress through so far. And we are just about, as you can see, nearly a third of the way through, okay? Right. Okay, details for tax. So yeah, that's the name of our business, and your business will be, written here. So details for your business. Okay. Now, did you have annual turnover? Did you have an annual turnover of £85,000 or more? We're going to click no here. If you did, you need to click on yes, and you've got to give a breakdown for your costs into about 6 different categories. Otherwise, it's just a simple figure that you normally put in when you do your self-assessment tax return. Okay, so we're going to click no here. The additional work, just when it comes to including the 85K the turnover, or the fact that you're VAT registered, it's just basically the costs. The only extra work you've got to do is just the cost elements of it and breaking it down into the different several categories that are there. Okay. Okay, so we're gonna please select the circumstances that apply to your self-employment. If none of them apply, please select the box. None of these apply at the bottom. So I am a foster carer or shared lives carer. I wish to make an adjustment to my profits chargeable to class 4 national insurance contributions. I'm a farmer. I'm a practicing barrister. I have changed my accounting date. Okay, the results of my accounts made up to date in the year to 5th of April 2021 have been declared on a previous return. So you basically fill in all this information. If, like I said, if it doesn't apply to you, just leave them blank. Okay. So this and the previous slides are a single screen for most businesses. None of these will apply at the end of it. Will be the choice for you. If any of them are yeses, for example, my turnover is less than £1,000, for example, and so we look at the bottom there. Okay, so my turnover is £1,000 or less, and I have made a loss. You can then check this for a bit more help and advice. Okay. If there are special arrangements for a business, consult the help screens and consider taking advice from a professional. Generally speaking, people, like I said, usually click on none of these apply because they generally do not apply to them. And if that's the case for you, in this example, it is the case for us. So we're going to click on none of these apply, and then we're going to click on save and continue. So we're going to just put the key information in there, your business name, description of your business, trade or profession. Postcode is optional, so we're not going to do it in this. We're going to leave this blank for the moment. Has your business name, description, address, or postcode changed in the last 12 months? We're going to click on no. If your business started after the 5th of April, enter the start date. Okay. It didn't. So for this, we're going to leave this blank because that's why we're doing our self-assessment tax form. Did your business cease? Okay, we're going to click on no on that. And then we're going to click on save and continue. Okay, so the accounting details for tax for this particular business, you just need to make sure that the dates are correct. And it will be for the dates your accounts are made up to. Did you use a cash basis? Yes, I've done this from my bank account. So if it's a no, you've done it from orders placed and invoices raised, but most people do it from their bank accounts. Okay, so you just click on yes and then save and continue. Okay, so this is your income and turnover and your, that side of things on this page. So income turnover goes in there, this top section here, but it's not including, okay, it's not including the self-employment income support scheme. So basically the grants that were around for that year, the grants that the government were giving for the coronavirus thing, you don't put this in this section here. You leave, this is just your self-employment turnover. The grants box has its own separate section where you would put these details in, and I think it's on the 5th or 6th page. Then the second bit here, any other business income goes in the second box, including coronavirus support payments and grants and things. Then you have trading income allowance at this bit here. That's optional. We'll discuss this on the next page. So you enter total income. And just be aware of grant payments for previous years, considering using trading income allowance other than recording costs if costs are less than £1,000. Okay, so what do we mean by trading income allowance? So the first top two, we've done that now, haven't we? Because we've got those figures there. This particular business didn't take any grants out, so this is going to be left blank. Now the trading income allowance, okay, this allowance is £1,000. Or you can put your costs here instead. So if your costs, okay, your allowable business expenses are really low, you can have £1,000 worth of tax relief. So you put £1,000 here instead. But if you do that, if you have put the £1,000 in there, then you would leave this bit blank. Okay, you can't choose both. It has to be either or. If your costs are over £1,000, then you would put that in the total allowable expenses section here, and then you leave this bit blank. Okay. So it's one or the other, and it's just sometimes it just makes life easier for business startups if their expenses are really low. Now here at the bottom here, we've got the allowable expenses is 12,123, and then it will show you the net profit after that's been deducted. So it's not happened here because it got submitted before we put the allowable business expenses. So we're just going back into that and we're just making those changes. So that will show on the following couple of screenshots, but right now it's not taking into account that figure there. But normally what it would show here is your turnover. No, so if your costs and your expenses are below £1,000, you can use a trading income allowance here and put that down as £1,000. Okay. But if your expenses are over £1,000, then you use that box here and you ignore the top box there. Okay. If you look into trading income allowance, you'll get a bit more information on that, but you can't claim both. It's one or the other. So the net profit would be the allowable expenses minus from the gross profit at the top there. So the figure would normally be 20, I think it would be about 22,000 and something, but we'll get the exact figure in the next slide. Okay. So you're going to click on continue. Okay, so we're going to skip all this completely because it doesn't apply to us. Okay. If you have any of these, just please speak to an accountant or professional to see where that information will be put and what you would need to do. Click on save and continue. Okay. So at the top here, goods or services for your own use. We're going to click no there. Self-employment income support scheme grant. So this is what we were talking about. This is where you'd put that information. So the SEISS stuff will go here if you had it. And once that's been included, then your net profit will show here at the bottom there, which is 22,220. Okay, now loss brought forward. Okay, if you made a loss in your previous tax year, you can click a box which says you can carry it forward. And if you do that, it appears in the next year and you could put it in this particular section that we've just spoken about here. So the loss brought forward. So you put it in here and that's a tax benefit and you can get relief on that. Just imagine you lost, you were in a loss last year of £8,000. Yeah. Now you can make use of that in your following year if you start making a profit. Otherwise that £8,000 just gone. Okay. It's a loss, but you can't account for that anywhere. So there will be a section where it allows you to check and say, I want to bring that forward. And then you put that here. And imagine if you put the £8,000 there, that would bring that net profit right down to like, 15,000 or something like that. So I've got nothing in this example to bring forward. So we're going to leave this bit blank and we're going to click on save and continue. Now, when I was talking to you about making a loss, and there's a section that you click on bringing it forward, this is where it would be. So if you're making a loss this year, so this applies to you now, then what you would do is you would pop it in the here. Total loss to carry forward after all other set-offs, including unused losses brought forward. So this is where you'd put that information, okay? And you would bring it forward for your following year. This applies to the construction industry. Okay, so the employers that they work for, they would a certain percentage of that gets deducted, and so you don't be, you're not paying double in taxes. So you'd pop that information in there, and you know what it is because you'll get a certificate from the employer. Click on continue. Okay, so now this is looking at. Oops, where are we? I think I went too forward, didn't I? There we are. Okay. Right, this is national insurance related. So just confirm you are exempt from class 4 national insurance contributions. Okay, so this is what you need to tick off if this applies to you. You are at or over state pension age at the beginning of the year of assessment. You are under 16 on the 6th of April 2021. You were not resident in the UK for tax purposes during the tax year ending 5th of April 2021. You are a trustee, executor, or administrator, but only in some cases. You are a diver or diving supervisor as described in section 15 of the income tax, or you click on none of these apply. Okay. If none apply, you are not exempt from class 4 national insurance contribution. Any other information for tax return, you just, any other information for your business will be put in here. This is just a summary, okay, of everything that you filled in, okay? We're now coming towards the end of your tax return. So we've got the business income, we've got the total allowable expenses, total, then it would be total profit, or if it's a loss for the year, that will be in this third column, third section here. and then any adjustments that need to be made. Again, accountants are sometimes brilliant for these kind of things. And then that's total profits or net profit or net loss for the year. And then for this particular person, it's 22,220. Okay, so then you can print this page off as well. Okay, or you can take a screenshot of all these just so that you know what's been filled in, because once you submit it, you can have access to it, but sometimes it's just because of all the security stuff you go through, then you yeah, I'll explain that to you in a moment. So yeah, so I forgot what I was going to say now. So yeah. So just take a screenshot of everything you filled in, because you may need it at a later stage. Quite good for when you're probably filling in some forms or for any third parties, etc. So just moving back on to Annalie's questions. What does it mean to not be exempt for NI contributions, so class 4 contributions? So if we just go back on to this page, right? So just talking about national insurance contributions. So Class 2, you have to pay if you exceed the 6,500, I think, 6,500 profits that you've made, then you would pay the Class 2 national insurance contributions. Okay, it's compulsory for you. If you're below 6,500 in profits, then it's not compulsory. It's an optional thing for you. But the Class 2 national insurance contributions contributes towards your pension. So if you're paying towards it, it will help with that pot, basically. Now, Class 4 is another threshold you have to meet. So if you've met I think it's at the 11,900 or 12,000 figure in profits, then you need to, it's compulsory for you to also contribute towards the national insurance Class 4 contributions as well. So there's 2 contributions there. There's a Class 4 as a self-employed person. There's the Class 2, and then there's a Class 4 as well. So please do look into that on the government website for more information on that. But you'll be exempt from that if any of the following apply to you. So I've gone back onto this slide here. So if you're this, or if you're this, you'll click on it. Okay. If none of these is saying here, if none of these apply to you, you are not exempt, which means you have to pay the national insurance contributions. If one of these apply to you, you're exempt from paying that. Okay, and national insurance Class 4 contributions is basically a top up because of your income. It's basically a top up to those contributions. Okay, it's building up that pot for you. Does that make sense? Okay, so like I said, you can print this off. And this is what we were talking about, the national insurance contributions. So Class 2 national insurance contributions, if your profits are £6,475 or more, you must pay Class 2 national insurance contributions. If your profits are less than this figure, you do not have to pay, but if you want to pay voluntary, please see the section below. For 2020 to 2021, Class 2 national insurance contributions are £3.05 a week. Your self-employment record shows you owe £0. Okay. If you haven't told us of a change of your circumstances or self-employment details for this tax year, for example, you see self-employment, you can tell us now by clicking this link. So you can click on that link. If you have used the link above to make changes to your self-employment details, you must click the recalculate button to get the new amount you owe. So we've got a link there that will take you on to a bit of information about national insurance contributions. If your profits for 2020 to 2021 are less than 6,475, you may want to pay Class 2 national insurance contributions voluntary to protect your entitlement to state pension and certain benefits. Before you decide, please check help to find out how not paying may affect you. So again, some more details on that. Do you want to pay Class 2 national insurance contributions voluntary? Okay, save and continue. Oh, that shouldn't have happened. Gosh, really sorry about that, guys. Right, so I'm going to click on continue. So this is all pension scheme stuff. Okay. So you need to fill that details in. Okay, and then you click on save and continue. If you owe money, you enter it here. You must click 0 or it won't let you move on. Okay, the whole screen flashes red. So just enter 0 if there's nothing shown, and then click on continue. Okay, underpaid tax, including in PAYE coding. Amount of estimated underpaid tax for 6th of April 22 to 2021 to be included in your PAYE tax code for 6th of April 21 to 2022 from your pay notice of coding. So again, click 0 here if nothing is shown, and you click on save and continue. Other debts that you owe, pop it in here and then click on save and continue. Okay, overpaid tax. If you think you have paid too much tax, you must tell HMRC where you want any repayments to be sent. Okay. We will always try to repay back to the credit or debit card you first paid with before making any repayments as requested. This will prevent delays. If you did not pay by card, HMRC will repay direct to your bank or building society account. This is the safest and quickest method, so you can authorize a nominee to receive your payments. Okay, please allow up to 4 weeks before contacting HMRC to chase up these details, okay, these repayments. Who will be receiving some or all of these repayments? You'll click on not applicable if you've not, especially if you're doing it for the first time, that doesn't apply to you. Now, any correspondence that you get from HMRC, please do get back to them. Don't instantly think that, HMRC get it right all the first time. They make mistakes as well. So just make sure you're, thorough and you're looking at all the details just for future references as well, to make sure that you haven't overpaid them. So it's always good to be aware of those things. But anything else that they message you on through post, just make sure you get back to them on that. If you have not paid enough tax, okay, so if you're submitting by 30th of December, you owe tax for 6th of April 2020 to 5th of April 2021, and you have a pay tax code. Do you want us to try to collect the tax and class for national insurance contributions through your tax code for 6th of April 22 to 23? So for moving forward, if you're working and you're self-employed, it will just come all off from your pay slips. Okay, so you click on yes and yes. Okay, have a read through both of these sections before you click continue. Okay. And then it's just adjustments to tax due. This will just make sure you fill in these sections. This won't apply to us. We're going to click on continue. And then you just need to include any other further information, okay, that applies. Does this return contain provisional figures? In certain circumstances, you may need to do provisional figures in case, like, you're coming towards the end of the 31st of January. You don't want to get fined. You don't have the accurate figures, but you want to put provisional figures in there instead. You can do that. So you can click on yes, and then just pop in those details in there. In this instance, we've got the accurate records there, so we could click on continue, click on no, and then save and continue. Please give any other information in this space, okay, optional, maybe because why you are putting provisional figures here. This is the right place for you to put all that information. Okay, so this is basically everything completed now. And it's just asking you to confirm if you're happy with everything. Okay, all of this has been completed. And if you're happy with all that, you click on next. And then it gives you a summary of everything that you've got here. So we've got here the total amount that is due, which is in taxes, £3,088.80, plus first payment on account for 2021 to 2022. So we did discuss payment on accounts, didn't we? Now that will be 50%. You've been earning. So because we're doing this tax return on the 31st of December, or in the month of December, and you're already in your second year, remember, because the first year came to an end on the 5th of April that year, 2021. So just imagine from what you're paying towards is 2021 to 2022. So you're already 6 months or 8 months into your second year. So what you're really doing is just paying a figure that you're probably anticipating to get in terms of turnover. And, based on the figures that, you've received this year, and the payment, the tax that you have to pay, they're basing it on those figures, that's what you're going to be potentially making this year as well. So you're just paying, is not in advance, it's just paying what you're already in the tax year, and you're paying towards the next year one. Okay, so that's what you're basically doing, and that's an assessment of the tax you owe from April to now, when you're doing your tax returns. It's not payments upfront, as I said. It's it's the amount that they think that may be due since then. Now, there may be an instance, okay, where you can challenge those figures, okay. Don't think you can't. There may be times when you can, okay. Like, for example, you're probably selling products, and like you're selling products, and it's the World Cup in your country, for example, and you had tons and tons and tons of sales that year, and that's why your turnover was so a lot, for example, and that this year it's gone back to how it was before, and you're not getting those kind of turnovers that the turnover that you did last year. There will be times when that might happen, where in special circumstances you're not getting the income that you previously made last year, and then what you want to do, if that's the case, you can challenge it. Click on yes, and then go on to continue. In this instance, we're going to click on no, and we're going to click on continue. But if you click on yes, it then asks you why, and you need to give a bit of justification on that. And if once you've done that, they may even be lenient on that, and reduce your or get rid of it completely. Okay. Right. Then once you're done that, it's just confirming that you've not submitted the return yet. It's just telling you to confirm everything, and then you save and continue. And then there's a declaration that you need to do as well. Okay. Just make sure you read that thoroughly. Check that box to say you confirm, and your final declaration as well, that is accurate from the information that you've given on this tax return is accurate and complete to the best of your knowledge and belief. And then yes, you click on submit, and then this is just the sign-in page again. So you put all those details, and you can sign in to go back into it again. Now, when you do it the first time, it's probably going to take you 20, 25 to even 30 minutes to do, because what you're wanting to do, you just want to read each part as carefully as possible. Make sure you're not making any mistakes. But when you've done that the first time, and when you move forward, you can skip through some of those, because you know what you need to tick and check off, basically. And you just need to put those 3-4 figures in there. Your turnover, your expenses, and your profits, etc. And moving forward, it may only take you 5-10 minutes for you to do and complete. Okay, so we have come to the end of today's webinar. Does anyone have any questions for me? We've got a couple of links for you to click on that might be suitable for you. If you want some business advice and support, click on, go onto our website. If you want any more webinars that you want to sit in on, please do, like the bookkeeping and finance one, please click on that link there. Email us, call us if you've got any questions or anything that we can help you with. So I wish you all the best with everything, and good luck with your completing your self-assessment tax form. Does anyone have any questions for me? No. Okay, you're very welcome. No problem at all. Okay, you're welcome. You're welcome, Fiona. Thank you, Jess. Thank you, Lynn. Okay, have a good day. Take care. Bye-bye.